Good evening, ladies and gentlemen. This is me, Vyoma Parihar, your host for the session, and I welcome all of you here at the third edition of world's largest fintech fest, the Global Fintech Fest. I'm sure you really are looking forward to hear our speaker today. And everybody, I'd like to tell you that this event is organized by National Payments Corporation of India, Payments Council of India, and Fintech Convergence Council. This edition of the fest is supported by the Department of Economic Affairs, RBI, and IFSCA. Everybody, before I go ahead, I would like to tell you about our sponsors. Our sponsors are the theme partner is WhatsApp. Our event is co-powered by Amazon Pay. Our spend management partner is Encash, and we are in association with Perfios. Payments partner is Cash Free Payments, and CEO's dinner partner is HSBC. So, everybody, I'm sure you all are ready for the session. Before I go ahead, I'd like to tell you that for this session, you can ask your questions as our speaker goes on. You can put in your question in the chat box and your screen. To make your screen full, you can click onto the maximize button and you can see the presentation and everything really clearly. I want you all to keenly pay attention to this presentation and make it as interactive as possible. All right, everybody. So the topic of the discussion is enabling customer protection for improving financial health, which is the part of the workshop. And we are really glad that we have with us our esteemed speaker lined up for the same. We have with us today Juliet Ongwae. She is the specialist digital financial services, MicroSave Consulting. Everybody, welcome on screen, Juliet. Juliet, over to you. We can start the session now.
Thank you very much. Can you hear me?
Yes, very clearly.
Okay. Excellent. Thank you. As greatly introduced, my name is Juliet Ongwae. I'll be taking you through today's session, just looking at consumer protection or customer protection and how then that can translate into improving financial health. So in terms of who I am, I'm based out of Nairobi. I work for MSC, and I've been in this space for a very long time. So I've been working in the digital transformation space, working on DFS. I worked with more than 50 institutions. This cuts across different sectors, private and public, working with financial institutions as they digitize or digitally transform. Worked both in Africa and Asia, and also a faculty member, senior faculty member at the Helix Institute, which is based at MSC. So what is MSC? MSC, we are a boutique consulting firm, and we work with our clients and partners across the globe. We've worked with, about 15 or so strategic and digital transformation of financial institutions supported in Africa. We've supported about 80 agent network managers, worked with more than 300 banks or financial service providers, and have been in this space for a very long time. We are about 180 staff members globally and have about 11 offices across the world. So for today, we have an agenda of about 5 items. Just take you through what is consumer protection and the why. Why are we looking at consumer protection, especially for DFS, and then unpack what we mean by financial health, which is relatively new. We've been concentrating on financial inclusion. So there's this focus or drive towards the next step, which is financial health. Then we'll look at some guiding principles for consumer protections. That this is for financial service providers, and then also look at now the regulation bit of it and see this outcome-based approach and whether this would work for enabling consumer protection. And then just finally have a conversation around what are the next steps to building this responsible digital financial ecosystem. So when we look at consumer protection, what do we want to protect consumers from, especially when we're thinking of digital financial services? So it's looking at the conduct of these financial service providers, or FSPs, as I'll call them in this presentation, looking at agents, looking at platform operators, payment service operators, looking at data processors, any other third parties that may harm these financial consumers. And we are looking at different types of what we call harm. This can be discrimination, so we'll be talking about some bias that can come in, especially when we are looking at artificial intelligence. We are talking about inconvenience, loss of time, loss of data integrity, poor service, monetary loss, which is what we always think to be harm, financial hardship, and over-indebtedness. So this definition of harm cuts across from discrimination all the way to over-indebtedness, which may have this negative consequence on our financial consumers, personal safety, and physical and mental health. So what are the main drivers when we look at consumer risk? They are put them into three buckets. So on demand side, especially consumers in emerging market, issues are usually around illiteracy itself. Now that's looking at just literacy and numeracy, or even when looking at digital financial literacy and capabilities. Looking at over-indebtedness, so especially when looking at solutions around digital lending. They also have a lot of lack of trust, both in channels, say like our agent networks, or in new technologies, which then drives some of these risks. And finally, asymmetry of information. So we have a few institutions that, have or are holding this data that then they do not share, especially when we are trying to assess consumer risk and mitigate risk. So the more data we have, the better. But we do have some asymmetries when it comes to information and data. When we look at supply side, so this is with the financial service providers, some of the issues are around product design. So products not tailored to meet these client needs, or having gaps that can then lead into risks, misleading communication, or unfair and excessive pricing, aggressive practices, fraud and theft, data breach, especially as we increase the amount of data that we get with DFS, and just inadequate mechanisms for client feedback is usually one of the biggest drivers. When we look at regulatory side, these are issues around the framework not being tailored to DFS yet. So sort of playing catch up or not covering some of these consumer protection guiding principles that we'll be looking at later on. Inadequate capacity. So the regulators are not able maybe to identify existing and new or emerging DFS risks. And then sometimes we also have some overlaps. So uneven regulation, we find financial service providers in the same market. Some are regulated, some are not. A lot of regulatory arbitrage, so financial service providers taking advantage of some of these gaps, and then we also see issues around over-regulation. So What really we can narrow this down to is the main drivers are really around this rapid expansion of DFS, which then opens up opportunities, but it also brings these challenges and risks, especially as different actors are trying to play catch up. This transformation of the financial system and the rise of now new or non-traditional providers. So once again, this will bring in new opportunities and risks, new partnerships and new collaborations, which then bring on board new business models that can then also allow some of these consumer risks or drive these consumer risks. We've talked about the low digital literacy, especially among our customers in emerging markets, and particularly women. And then these issues around effective regulation and supervision. So these are the four main drivers that really push consumer risk. So when we think of financial health, so we've looked on one side, looked at consumer risk. Let's also then unpack what we mean by financial health and then see how we can bring the two together. So it's still new, this financial health, and we're still defining what it really means. So we have several organizations that have developed frameworks that are trying to now define what this concept of financial health is. We have IPA that's looking at financial health as an ability to access funds quickly and affordable. So they've come up with these three constructs: access to funds, access to finance, and financial behavior. CGAP looks at it in two ways: being able to build resilience so that you can pursue opportunities. So they have these two constructs as they define financial health. CFPB is looking at financial health as a state of being where a person can meet their current and ongoing obligations, feel secure in the future, and able to make choices. So able to make choices, looking at future, and of course being able to meet your current and ongoing. Very similar to the United Nations also definition, which is again looking at smoothly managing your current obligations and future. So what's running across, the theme running across all this is that it's moving from access and use of financial services or digital financial services, and now moving towards aspirations, moving towards future obligation, moving towards choice. Conversations are starting now to move towards not what are the users' needs, but more what are the aspirations, and how then can financial services help them to be sustainable and to meet their future obligations. So key themes we are seeing is manage day-to-day, resilience to shock. This is especially more so important post-COVID. So we saw what happened with COVID. So having our financial consumers being able to build resilience and the ability now to access these resources and recover from any setback. So how possibly do they save? Do they invest for future? Do they invest for any shocks? Do they look at things like insurance? And so that they can build their resilience. And then having a long-term financial outlook. So for a long time, when talking about DFS, we've just been looking at how can we support them then now. They can be able to buy stock today or tomorrow. What is their need today. But as we look at financial health, we have to start looking at what solutions can we provide our consumers that has a long-term financial outlook that can support them with their aspirations, with investments, with their future. And then we also have a running theme around appropriate debt uses and effective debt management practices. So why does financial health matter? So as I mentioned, we've been talking about financial health and moving away from financial inclusion. We're starting to see research around this concept, but its application, especially in low and middle income countries, is still in the early stages. Yet it's very important to look at financial health, because ultimately it then helps us to be able to gauge this outcome of our consumers' use of financial services. So being able to support them just for their daily needs does not really then give a good picture in terms of the outcome or the impact of our financial services solutions. But looking at along that spectrum in terms of our financial health then helps us to be able to start now gauging the success of this financial sector in meeting these consumers' needs now and future obligations. It also has like a sort of a macro impact, because it's able then to connect to other concerns, other social and economic concerns that this same consumer would be having. So concerns around income, employment, safety nets. So it expands that scope to go beyond just addressing their financial needs, but also looking at what are their health needs, what are their needs in terms of income, employment, safety net. It also helps in terms of examining the financial capabilities of these consumers and measuring the success of financial education. So we've been talking about improving or creating consumer awareness, increasing their knowledge. But then how then do we know that this has been successful, or our whatever we put in place has been successful? It's in looking at their financial health, the way they move along that spectrum can then let you know that at least there's some knowledge transfer and they're able to now be empowered and be able to start thinking about future goals. And finally, it then helps in terms of developing these financial tools that will continuously help in terms of increasing financial health. So when we look at consumer protection and how then can we as financial service providers be able to ensure that we develop or design our products, our processes, our policies, to be able to then ensure consumer protection end to end. We do have a few guiding principles. So we have principles that started out with the SMART principles. They were called consumer protection principles. But over time, we have institutions that have adopted these guiding principles. A few changes here and there, tweaks, but in essence, it still remains about 7 or 8 guiding principles that look at this spectrum end to end. So today we'll have a look at some of these principles in depth and see then how you can apply them, especially as you design your products or solution or services for especially the emerging markets. So the guiding principles usually focus on product design, so ensuring appropriate product design, ensuring that you prevent over-indebtedness. So we'll look at what does that mean and how can you do that, how data can support us with that, ensuring that there's transparency and being able to provide your customers or consumers with the data that they require to make informed decisions, responsible pricing while still being sustainable, looking at a fair and respectful treatment of these clients. So we've had issues or seen feedback that they have issues around trusting our products, our channels, and it's usually around how we treat them as clients. As we move towards digital financial services, we have a lot of data that comes in. So how do we ensure privacy and security of client data? And then what mechanisms do we have in place in terms of complaints resolution? And finally, just looking at empowering these customers. So ensuring that we provide financial education or we partner with the right institutions to provide financial education. So when we look at appropriate design of products, this is just looking at responsibility to design products that are, do not cause harm and do not and take into account these client characteristics and feedback. So characteristics and feedback around maybe literacy level, any issues and concerns they have should also again feed back into this design loop. So looking at design, implementing and regularly monitoring your products and your delivery channels so that you can minimize these risks to the clients. Looking to see whether it is suitable for the client. So not pushing products to say a mobile app when your clients have feature phones. So looking and understanding who your customers are, what devices they have or what tools they have. So what would be the appropriate channels to serve them appropriately. Looking at a waiver, no waiver of rights. So what this means is prohibited from requiring clients to waive their rights. So we see this a lot in the market. Clients being asked to waive their rights as a condition to receiving the products. And then also mandating this recession period during which a client can be able to rescind the contract. So giving them a period, cooling off period or a period where they can review this contract and be able to come back and say, we would want to rescind. And finally, just being able to prevent fraudulent and mistaken transactions are some of the elements that we can find when designing products and delivery channels for our clients. We talked about preventing over-indebtedness. So this is looking at taking adequate care in all phases of your credit approval. So this is mainly for digital lenders or providers that provide digital credit, and making sure that you determine that your clients have a capacity to repay. So don't push out credit to clients that are not able to repay your loans. So using data as much as possible to assess credit worthiness before extending or even renewing credit to your customers. Being able to supply this information to either credit reference bureau, if you have any, so that we can build this database of credit information and have a 360 view of our customers as we enhance this credit worthiness assessment. Third is looking at disclosure and transparency. So being able to communicate clear and timely information in a language that your clients understand so that they make informed decisions. So we have what we call disclosure principles. So communicating your terms and conditions upfront before they can consume the products, so they can make this informed decision. Having your rates, fees, terms and conditions public, so being able to publicly report or post these rates, not charging fees without disclosure, so not disguising your fees, you know, so that the customer can understand the true cost of this product, and having the market having this standardized way of calculating the fees and the rates. Fourth is around responsible pricing. So setting your pricing and terms and conditions in a way that's affordable, but still remaining sustainable. It's still a business at the end of the day. So how do you ensure that there's a balance between your pricing, it being affordable while still being sustainable? So as you do this, and especially when we're looking at our clients in low and middle income, looking at their needs and ensuring that these prices are again set within the context of applicable laws that are the laws that are against anti-competitive practices. Also setting any service or penalty fees based on the transparency principle that we've just talked about. So making sure that any penalty fees that you put in place are clearly stipulated upfront, and the customer is aware of what the penalties are and the fees. Fair and respectful treatment of clients. I don't think it takes too much, because it actually is a principle that cuts across to all of us, whether it's financial consumers or a public in general. We are all entitled to dignity. So even as we not only design our products, but looking further downstream in that process. So when we're trying to recover, especially for loans and things like that, making sure that we treat our clients respectively and fairly. So privacy and security of client data, so just making sure that the data is protected. So we have, when we look at general obligations, we have an obligation to collect and process this data in a manner that protects their privacy, preserves their confidentiality, and of course secures the data. We are also supposed to look at client rights and, you know, setting forth the range of client rights. So they need to be aware of what their rights are and how you'd be accessing this data and processing the data. Making sure that we on our end, we've put in everything in place to protect this data, and we disclose to the client how we shall use or share this data, and also get consent from them prior to processing and sharing the data. Complaints resolution mechanism. So putting mechanisms in place to ensure that the clients are not only aware of their right to complain, but they know how to complain and the process is easy for them. We are now seeing different complaints handling mechanisms in place. We have call centers, we have social media, we have chatbots. So as we digitize our products and processes, we can also digitize in terms of how we handle complaints, our internal complaints, and ensure that our customers are aware and are able to give us that continuous feedback, which then should loop back into how we design our products. Finally, just looking at financial education and awareness. So basically empowering our clients. So we need to use simple language that they can understand. We need to have the right partners in place that can help us develop these financial education programs and be able to disseminate this material. We are seeing institutions or financial service providers moving to digital education, where they're able to now provide this material digitally, either through SMS, through videos, through links on YouTube, through WhatsApp. So when we talk about consumer protection in this digital age, there are about three things that we can focus on as the market grows and consumer protection also starts to look a little different. So one is algorithmic bias. So as we bring on board machine learning and artificial intelligence, there could be inadvertent discrimination and financial exclusion. So as you're analyzing the data, we could actually be excluding the thin client or thin file clients. So clients that do not have digital footprints, do not have this data, we could be inadvertently be excluding them as we are training our machine learning and as we are building our AI systems. Second is looking at how we protect consumer assets or consumer digital assets. These assets are now digital. So looking at digital security and what we put in place to secure these assets, looking at what we put in place in terms of cybersecurity and ensuring that then we can mitigate these digital frauds and scam that we are seeing increasing the more we move to digital platforms. And finally, looking at privacy and data as a commodity. So we are getting access to a lot of data from our clients. Are we looking at consent? Do they understand what consent means, or are they just saying yes so that they can move to the next step? So how do we support these customers to be able to understand the data as a commodity, or how we would be using data as a commodity, and also just ensuring that we provide them privacy, data privacy along the way. Don't know if there are any questions, or I can move to the next slide.
There is no questions as such, Juliet. We can continue with the presentation. We're waiting for some more questions. Yes.
Okay, thank you.
I see one question by Abhishek. Does the lack of digital literacy play a role in higher interest rate or premiums in case of insurtech for people? If so, would accessible social programs on literacy help in reducing this?
Sorry, that's Ritika. Please just repeat the question.
Does the lack of digital literacy play a role in higher interest rates or premiums in case of insurtech for people? If so, would accessible social programs on literacy help in reducing this?
Yeah, that's a very interesting question. Yes, it would. I would imagine it would play a role in terms of increasing the premiums. And definitely anything that we put in place in terms of empowering these customers so that first they can understand the choices available and make the right choices, right products, can then be able to bring down these premiums. As if you're talking about insurtech, but tech or fintech in general, definitely financial literacy and awareness would definitely help in terms of bringing down the cost for the customer. There's cost to frauds and scam. There's costs to taking the wrong product, and maybe you're not able to pay, say if it is digital lending. There's costs even to the customer not understanding the pricing model or the product itself, and taking the wrong product for a wrong use. So definitely, the more we empower our customers, the better we are in terms of consumer protection and mitigating some of these risks that we earlier saw.
Okay, we have some more questions. I would like to read it through as I've just received it. All right. So let's take this question, which says, are there any drivers of DFS consumer link that also play an influencing role?
Please repeat that. Are there any?
Are there any other drivers of DFS consumer risk that also play an influencing role? I'll repeat again. Are there any other drivers of DFS consumer risk that also play an influencing role?
Maybe you can expand on the question. So let me try and understand. Are there other
Yeah, there are other questions. Let me get on to the next one. The next question is, please give an example of how financial health can help in debt management for consumers who have multiple debts. How to encourage consumers in debt to improve their financial health?
Yes. So first, when we talk about over indebtedness, already then that speaks to a gap or a problem in terms of first, product development, second, the assessment, so credit, as your credit assessment model. So when we are designing our products, we need to understand these consumers and understand their ability to repay, and so that we can know the right amount in terms of debt that they should be getting. But that said, we do know that consumers have multi financial service providers that they engage. So in one sense, in your institution, you could be thinking that the customer has one loan, but they've gone out and have 3 or 4 loans. And that's why I was talking about this data reporting, especially to Credit Reference Bureau, so that you can have this 360 view of the customer in terms of their debt position, and be able then to make this informed decision in terms of whether this customer is able to pay off your loan or not. You can see the signs in terms of the customer being over indebted, and then be able now to advise them that you would not be able to give them possibly a loan at that time. Now, this then, of course, will trigger or trickle into the financial health of this consumer, because an over-indebted consumer definitely is not a healthy or financially healthy consumer. And so we need to invest in terms of awareness, education, so that the customer understands the consequences of over-indebtedness. We also need to understand the right products for this customer. So why are they taking multiple loans? So you find sometimes customers are coming in, they have taken a business loan, education loan, maybe wash loan, maybe to buy something, a water tank or things like that. So you find that possibly being able to either stagger these loans or bundle the loans in a way that can help the customer, can bring down the cost for the customer and help them along their journey in terms of financial health.
Okay, so we have another question in here, and which says, how do we define consent? How do you differentiate between implied consent versus consent? In what scenarios is implied consent justified and safe for consumers?
Yeah, I think that's $1 million question. So we, as I was talking about consent, we find that these terms and conditions and consent are put in just before the consumer can access the loan. Now we are having a consumer that has walked in that wants to get is in need of credit, has walked into your solution, and just before they can get the credit, they've been hit with a consent. So of course they say yes, without quite understanding what they're consenting to. And so I think beyond looking at implied or not implied, it's more supporting this consumer so that they can understand what consent means, because it is only then that we can move to this next stage of unpacking consent, whether is it implied or not, implied. At the first point is, do they even understand what consent is? At the point they say that yes, you can access my contact book within my mobile phone. Do they understand what that means and what the implications are? So maybe beyond giving descriptive details in terms of consent, also adding the consequences. So beyond asking, do you consent to us getting access to your data from the mobile phone? Them also understanding the consequences of that consent. Because what happens is they see these consequences much later down the line, when possibly they have delayed in payments and things like that, and data that was sitting in their phone is now used as part of that recovery process.
Okay, so there is another question that we have. So we have one more question. Actually, we have 3 more questions. It all depends. You want to continue with the presentation, we can ask the questions later, or you want to take all the questions just now only?
No, I can take the questions.
Okay, wonderful. So these questions. So the next question is, what steps can be taken to highlight no waiver of rights to the consumer for a new service provider? I repeat the question. What steps can be taken to highlight no waiver of rights to the consumers for a new service provider?
What steps can be taken to provide?
Highlight no waiver of rights.
Oh, no waiver of rights.
Yes. To the consumers for a new service provider.
Good question. So is this in, let me. So are we talking about this principle?
Perhaps, yes.
Can they unmute and ask the question so that I can understand and just be able to guide?
All right. So, yeah, I think this is the thing that they're asking for exactly. Let me just cross check once again if that is the question. Disclosure principles. I think this can surely help, Juliet. I think this can help if this is in regards to the question we've just asked.
Okay.
You can elaborate on this also if you want to.
Okay. So yes, so when we're talking about disclosure and transparency, we are looking at them being able to understand your fees, your rates, your terms and conditions clearly. So it's not just informing, but also from your end putting effort to ensure that they do understand what these rates are, being able to be open and public in terms of your rates and fees and terms and conditions. When they change, for them to also understand the implications of this change. So as we increase the fees, introduce penalties, then what are the implications, especially to the cost of the product and service?
Okay. So we have another question. Um, Other question is, what are all the standards certification available for implementing and verifying the correctness of AI model with respect to consumer data protection?
Yes. Yes. So we just right now we have a few that are in the market. So I did mention that these OECD principles of artificial intelligence, and this has also now provided a basis for many others. So we have the G20 AI principles that were released that are fairly similar to this or based on these principles. And just when you look at these principles, they highlight a few key items, which is transparency and responsible disclosure. So we need, much as we have this AI-based system and or machine learning, and it spits out this, say, credit score, we should be able to also understand this outcome and be able to challenge it. What sort of has gone in vis-a-vis what has come out. So what you find in the market is a big black box that then you're not able to see what goes in. You only see what has come out. This then means it can be discriminatory without knowing, especially for regulators, supervisors. They want to understand, yes, you're building this system. Yes, you have this credit score, you've used this data, but they would want to understand what goes into this algorithm to be able to give them this outcome. I think that's usually one of the biggest issues. Second is around ensuring that even as you collect the data and everything, it's still within the applicable laws, especially the data laws. And then just the ones developing or operating these systems should also be held accountable for it to ensure that it's functioning properly and in line with these principles and even the other consumer protection principles. So we do have several principles out there, but when you look at them, those are some of the key themes across them. One is around this black box, and providing transparency into what has gone into it, disclosing to clients in terms of their scores and what data is being used to go in, and ensuring that this system is continuously running, it's up and running and functioning properly.
All right, so let's take another question. The next
Sure.
question that we have says, will monitoring client indebtedness cost more? How to embed a monitoring system that is cost effective yet efficient?
Yeah, that's a good question. So we do have tools that we can use. Of course, the best is data, and we'll talk about it towards the end. where we all need to collaborate. So I don't think it can be done in silos, because then you do not have this 360 view of your customer. For you to safely say your customer is over indebted or not indebted, it depends on how you look at it, then you need to have all the data that you can possibly have on the customer in terms of their financial transactions and things like that. So it still boils down to how we can get the data and how we can aggregate this data and be able to then tap into these data aggregators and be able now to make informed decisions around whether this client is indebted or not. So yes, there is costs to doing that. There is, I think, cost in two ways. One is data. Second would be in equipping the client or empowering the client so that before they come, for this credit, they also assess and see whether it's credit that they can be able to repay. They understand the consequences of not paying. So on one end, we can analyze data, but on the other end, clients also need to be at a stage where they can be making the right decisions. And for them to get there, we also need to support them in terms of literacy and awareness.
All right. The next question that we have is, how can consumers be informed about their client rights regarding client data protection?
How can consumers be informed about
Informed
about
about their client rights regarding client data protection.
Okay, so this can be proactively. So this can be through maybe SMSs, so that they understand, and it can be two-way SMSs so that they confirm that they've received, that they've read, and they are sharing back with you or consenting that they've read and they understand. This can be through social media, so they continuously engaging your clients and sharing this information so that they are continuously informed in terms of their rights.
Okay, noted. And the last question is, what steps can be taken to build or improve machine learning and AI strategies used for consumer protection?
Mm. So
What
this
steps can be, I'll just repeat the questions once again. What steps can be taken to build, improve machine learning and AI strategies used for consumer protection?
I think once again it will still boil down to data and the type of data that you use. So when we look at the market that we work in, especially low and middle income, we will see that customers do not have that digital footprint. So it's one thing to say that we want to have machine learning or AI for consumer protection, but it's another to also understand that we have limited data. So it is, how do we first possibly push our customers to say mobile devices, and not only feature phones? How do we support them so that they can transition to smartphones, so that we can start to also again collect this data? How can we digitize data that we already have? So we do have financial service providers that have not digitally transformed or are going through that process. So data that's not digitized, again, of course, then is not helping in terms of our machine learning system. So it is investing in the digital transformation, both for financial service providers and for our clients, so that we can ensure that we not only collect data, but we collect the right data that then will feed into these AI systems.
Okay, thank you very much, Juliet. So thank you everybody for sending us so many questions, and please keep sending your questions in the chat box. We'll be taking up as we go ahead in the presentation. Juliet, now you may continue your presentation.
Okay, thank you. So in terms of, so we've talked about what is financial health. We've talked about the risks, or what has brought on board this discussion around consumer protection. We've looked at these guiding principles for financial service providers around consumer protection. But there's still one more leg that we need to discuss, and this is around policy, regulation, and supervision, that supports this consumer protection conversation that we're having. So we are going to look at what we are calling outcomes-based approach to regulation. So there's been a lot of work around this space where we now push this, regulation, or we push this consumer protection away from, the onus being on consumers towards the onus being on financial service providers. So I'll just take you through what we mean by this. Just 1 second. So we're seeing developments of DFS, then now demanding the improvement of these regulatory frameworks so that it can support and create this enabling environment for DFS. And so there's been this push for regulators to start moving towards what we are calling the customer outcome-based approach. And I'll take you through what that means. So the first step is where they set these customer outcomes as the consumer protection framework. So we'll talk about what we mean by customer outcomes. They're usually talking about giving or ensuring the customer has a voice, a choice, that the products are suitable and appropriate, there's fair treatment, safety and security. And all this is geared towards ensuring the customer meets their purpose, or pushing towards this financial health. Two is then how we can incentivize responsible provider behavior. So how do we incentivize financial service providers? And then three is having this continuous dialogue between the different actors, and so that we can now push for consumer protection. So when we look at setting this outcomes, customer outcome, we are talking about this shift from what we are calling buyer beware to seller beware. So where these approaches are emerging as, a very promising consumer protection paradigm, where these regulators start to shift from provider compliance. So instead of having this, form that they tick, checklist, they start to move towards what is the impact on the customer, what's the results and the outcomes that have been achieved through this provider's actions. So instead of saying, do you have terms and conditions check? Did you inform, did you get consent? Moving from that to where they start to now understand what was the outcome or the impact of your products on this customer. So it's rebalancing, these dynamics, moving from do not harm to improved outcome. So when we're talking about do not harm, it's moving from this sort of negative space of avoid, to now proactive, ensure suitability and aim for best interests. So what are you putting in place to ensure that you prevent these adverse outcomes, and not only now even prevent, you improve. So putting this customer in the middle of all your decisions, your product designs, as opposed to pushing the back to the buyer, you taking it and being proactive, and saying, this is how I want to protect my customer. I want to ensure they're empowered. I want to ensure that we are in a space where we shouldn't even be talking about protecting of consumers, because we've developed the right products that are meeting their needs. We've put in place mitigation and things like that, so that that consumer is focused more on using your products, as opposed to whether this product is harmful for me or not. So this customer outcomes is now becoming the center of regulation, and there's about 5 outcomes. So these are suitability. So where we want the customer to say, I have access to quality services, that are affordable and appropriate, and appropriate to their preferences, to their situation, to their context, to their financial situation. We want the customers to say that they have choice, so they can make an informed choice. To make an informed choice means they have been empowered, they've been educated, they have choices. So it's not just one size fits all product. They have choices, and they have the information to make this informed decision. They are treated well and respectfully throughout these interactions with the financial service institutions. They can communicate through different channels, and their money is safe. So what we are saying is that financial authorities or the regulators or supervisors are now shifting to starting to look at how you're ticking boxes in these 5 outcomes, in terms of suitability. Are you providing choice? Are you providing voice? Are you essentially meeting the customer's purpose? So for financial services, if they do not meet now this purpose that we've just talked about, even at the beginning, then they'll definitely not be supporting good financial health. And so what I mean is, in the beginning is that do not harm space, where a financial service provider is sort of giving the bare minimums. We can call that bare minimums now, but it's probably where we started a few years ago, where at least you can inform your clients in terms of your fees, your rates, your products, your terms and conditions. But what we are saying is we now need to move away from thinking that's enough, and moving now towards not only meeting the customer's purpose, but now actually tapping into and contributing to the customer's financial health. So moving from ticking the box, yes, I trained them, yes, I asked for consent, yes, I've ensured that there's data privacy, to actually informing them of their benefits when using your products, to moving to even now equipping them to understand how they can save, with your channels or with your products, or how they can now move towards these aspirations that they have, and saving for future, and finally moving to a place where they are empowered. And as we defined this financial health, they can capture these opportunities that they have and build resilience. So not only just identifying opportunities, but being in a space where they can then build resilience and capture these opportunities is where we want to move to. And why do we, want to move to, and what are some of these examples for these different outcomes that we're talking about? So when we talk about these good outcomes, they then, of course, require these customer-centric goals. So as you're coming up with your KPIs, you have to now move from, those financial KPIs that we are used to moving to KPIs that are focused on the customer. That's the only way then we can start to ensure that we are ticking the box in terms of the good outcomes, suitability, choice, voice, and things like that. So moving to KPIs, such as lifetime value of this customer. So understanding this customer has joined us is how do we ensure that they remain with us over their lifetime, and how do we calculate this lifetime value of this customer. Looking at retention rates of your customers. So how many are we retaining? How are we cross-selling, upselling? What's the market share we have to start speaking to that your products being suitable? Having customer journey maps. So continuously understanding your customer personas, the different personas that you have, and then mapping their journey so that you understand their pain points. And then you can be able to ensure that the way you engage with them is fair, is respectful, you understand what their needs are, what their risks they face, and it's not just about going in and trying to maybe recover your loan, but also understanding this customer journey. This is where they're at. These are some of the pain points that they're having, and being able to have a sit down with them and come up with an understanding. So we talked about the second one being, okay, we've moved towards this, achieving this good customer outcomes, but how do we incentivize provider behavior to support these good outcomes? So first is looking at the culture and governance, so setting customer-centric strategies, policies, and procedures, even within your own institution. So it's not just waking up and thinking that you can be customer-centric, but starting, even as you are a startup, as you set your strategy, look at your value propositions and business plan. How are you tapping into the customer and making sure that whatever strategies you're putting in place are customer-centric? So you're finding that regulators now are also starting to set, these individual accountability roles and responsibilities for key customers to ensure that this is met. So within your financial institution, having key roles or key point people that then push for customer centricity and continuously make sure that your institution remains focused on that. It's very easy to think about, financial bottom line, but it's good to start thinking of double bottom line or even triple. So looking at social performance as a key metric beyond just financial performance. Conduct risk management. So even as we do that, putting in place these measures, controllers, compliance overseers, and supporting them so that they can take on these customer outcome responsibilities and understand where some of these risks that can come in, even as we focus on our customers and shift this strategy. Your financial product governance, so looking at your internal processes and how you then have this feedback loop in terms of you've gone out, understood your customers, given them channels to complain, channels to provide you feedback, but taking this insight and again feeding that into either your product design, your process design, your strategies, evaluating how you communicate with your customers. These are some of the areas then that regulators will be shifting towards in terms of understanding within your institutions how are you having this continuous feedback loop and iteration as you build your products and ensuring these customer insights getting into it. And when they look at maybe external elements or how these external provider interactions with customers, first is looking at emphasizing the need to gather and analyze information on your customer needs, their journey, and protecting this data even as you collect it. Focus on how providers assess their customers and offer products that fit. So when customers walk into your products, how do you assess them? And so these questions we're having around AI bias and things like that, and transparency are things that then they will focus on so that they can ensure that the customer assessment is effective and is not discriminatory, and that the products that then are available to the product to the customer fit their needs. And finally, customer recourse. So looking at not just providing that platform for inquiries, but using this data. So we have CRM software in the market that is able then to help you analyze data that you receive, say from your call center, chatbots, from social media. So being able to gather insights from this, again, identify any trends and things like that. We find that the regulators themselves are also doing the same thing, moving and shifting towards social media and chatbots for them to be able to gather insights about the sector or the industry and build this 360 view of what's happening in terms of especially consumer protection issues. Finally, we talked about this dialogue between different actors. So strengthening this dialogue will definitely help. You can see we don't even have this one size fits all definition of, say, financial health. So as we speak with each other, we can be able to now clearly define what that means, what are the expectations around even consumer protection, ensure that whatever we agree on is, realistic, can be measured, what are the metrics. So when we're talking about financial health, how do we measure that? What metrics do we use that can cut across different jurisdictions, different sectors, different economies, and being able to understand the different challenges and supporting each other to address these challenges. So we are seeing where regulators and industry are speaking. We are seeing industry associations. I don't even need to name them. I think in every market, there are associations that have come up that are supporting fintech or supporting DFS and bridging, that gap between regulators and the market. We are having panels of industry representatives in advisory roles to support or give this big picture or strategic insight or oversight. We are having forums where we continuously engage each other and exchange knowledge and learnings from each other. We're seeing where regulators set up what we call innovation offices, sandbox, for mutual learnings where you can go in and both of you can learn. So giving a forum or a space where you can engage, test your product or your business model, and so that the two of you or both of you can be able to understand what the associated consumer risks and outcomes are before it goes into the market. So in terms of next steps, how do we then build this responsible digital financial ecosystem? I think this is three-pronged, and I think I've been talking about it throughout. One is focusing on customer centricity. So we all have to put this customer in the middle of our product design strategies in our business model, so that we can create what we are calling sustainable business value. So it's not just attracting these customers, but retaining the customers. Two is around capability. This is three-pronged for the different actors. Consumers need knowledge, they need to be empowered. Financial service providers probably need new roles, new skills to understand and serve these customers better. And financial authorities also need to acquire these same skills or staff or roles or expertise, so that they also understand these new technologies or emerging technologies out there. So when we're talking about AI, for a regulator, they also need to understand what is this AI, so that it stops being this black box, and they can also understand what are then some risks and consumer outcomes that they should start thinking about, and then creating that enabling environment. And finally, it's collaboration for knowledge exchange and also to better identify and reduce these risks. So that's it on my end. Are there any questions?
Yes, we do have a lot of questions. So let me read out for you. Here is the question that we have. What channels can be used to improve communication between customers and the FSP to resolve issues at a minimal cost?
Yes. So it once again depends on which market you are in and your type of customers. So we've seen SMSs being the channel of choice for most financial service providers, and one way or even two-way. SMSs being a good place to start. But that said, as our customers are moving towards smartphones, we have seen chatbots also being cost-efficient way to engage your customers, or to give them also a platform to engage with you interactively, and through social media, especially if it is one way, if there's information you need them to see. But two-way, again, of course, then means there's a cost to that, having people then that can be manning these social media sites and being able to respond to your customers. So I would say SMSs has been a great place to start, but we we are seeing a shift towards chatbots as being cost efficient, but it also depends on your customers.
Thank you. And here comes the next question. The next question is, can you give an example of methods to empower the customers to capture the opportunities?
Yeah, great question. I think first is also starting with the customer journey and understanding your different customer personas. So different customer personas would have then a different journey and would have then a different aspirations towards the end. So I think once you start with mapping out your customer journey and understanding them, you can then know the best way to communicate with them and empower them to be able to make these right decisions. So first can be, we have seen financial service providers remaining focused on their their core business and bringing on board strategic partners that can help you with this, creating this content around education and empowering your customers. So instead of you investing in probably creating content and having these platforms to engage with your customers, bring on board a strategic partner who that's their core business, and getting them then to engage with the customers. Sometimes it can be through videos, so sending links, and they can be able to get click on links and get information. So we've seen some, say, credit reference bureaus doing that very well when they want to give information to their customers and empower them. We can see, once again, you can still go back to the SMSs, but then again, of course, that limits in terms of how you can engage them. So I think the videos have been good in terms of digital education, using social media platforms and the WhatsApps.
All right, and here is the next question. The next question is, what steps can help FSPs to improve their cost to income when they are interested in acquiring more customers from the same customers?
Yes. This, I think, is from the beginning, analyzing your data very well. So if you have access to data, you have good scoring, then what that means is you can profile your customer. And that then means you not only are able to predict in terms of the products that they need, but you can even prescribe. So an example is, with good use of data, you can profile your customer and be able to say, this customer has come in for, say, a school, stock loan, or working capital loan. But when I look at a customer profile and their data, they have maybe children, so you can anticipate that possibly in the new term, they would want access to a school fees loan. You can then start to prompt or advise them in terms of, these are some of the additional products that you have, e.g. a school fees loan. And then that would help you be able now to serve the same customer with multiple products, or to cross-sell to the same customer while still keeping your costs down. So it is always ensuring that you get it right from the beginning and using data effectively or efficiently to be able to have this good understanding of who your customer is and go beyond just a financial profile. That's what we are saying here. Understand what are their pain points, because then you can anticipate the kind of products that they would want from you and when they would want the product. If they're farmers, you can anticipate when they would be coming for an input loan, when they would be coming for support, maybe to get funding to pay, maybe have people that will help them with the harvesting and things like that. So making good use of data, I think, is the only way to bring down this cost. And when you want to sort of cross-sell or upsell.
That this was indeed a great insight, Juliet. And now we have another question. The next question is, can you give an example of some regulators commonly followed that causes customer harm and negatively impacts proper financial product governance? What ways do you suggest to inform businesses about these harmful regulators?
I'll try and understand the question, but I would not call them harmful regulators. So I'm not too sure what that means.
Do you want me to repeat the question, Juliet?
Yes.
I will do it. Okay. So can you give an example of some regulators commonly followed that causes customer harm and negatively impacts proper financial product governance?
Okay.
What ways do you suggest to inform businesses about these harmful regulators?
Okay.
Yeah.
Yes, I think harmful regulators is a strong word, so I don't think that's what we would call it. I think, as I've talked in my previous slide, it's more building regulators' capacity to understand also these changing dynamics. It's continuously changing, so they also have to be in that space where they understand, they have the expertise to understand the changes so that they can now feed that into their policies. That said, they also are using these same approaches in developing their policy, so making sure that they are customer centric, because you're the customers, and making sure that as they come up with policies, that these policies are right and enabling for DFS. So what I would call not necessarily harmful regulators or harmful regulation, possibly regulation that can stifle maybe innovation or that can bring about consumer harm, is possibly what that question is asking about. I think it's more trying to think at the top.
Basically, what are they asking is exactly they're asking, can you give us some kind of example of some regulators that is commonly followed that causes the normal customers a lot of harm and it negatively impacts the proper financial product governance? So if you can give an example, something like that.
Okay, I can't think of anything at the top of my head in terms of a harmful regulator that can now cause consumer harm. But
Also,
yeah,
the
let me
last part
think.
of the question is, what ways do you suggest to inform businesses, to inform various businesses about these harmful regulators? How to inform about these regulators?
Yes, and that's what I am categorical about, that I would not call them harmful regulators. I'm not too sure what they mean by harmful regulators, because regulators are there to support and to enable, so they cannot be or are not harmful regulators. Possibly harmful, maybe.
Basically, the spam they're talking about, the people who are keeping check on your transactions and things, the people who can, cheat on, like, create a kind of a problem for their transaction. They are keeping a check that how the transactions are going on, and they're harmful for the basic businesses.
Yeah, not too sure I understand the question. Maybe I can give it some thought.
We can skip this part. Never mind. All right. Okay. Can we go to the next question, Juliet?
Yes, go ahead.
Yeah. Here is the next question that we have got, which is, what steps can businesses take to openly address new challenges to strengthen dialogue?
What steps can?
What steps can businesses, so basically, what steps can various businesses should take to openly address new challenges to strengthen the dialogue?
So in terms of, so we talked about it. I think being part of industry associations is a good place to start.
Correct.
Because then you are in a space where you can dialogue with colleagues, be able to also shape and develop this, they say, the codes of conduct. You can be part of that journey. That means then you also understand what is required, and you also shape that conversation around the codes of conduct. I think also having these open lines of communication with your regulator is always a good place to start. So do not fear. Make sure you have that conversation so that they can understand your business model, and you also can understand the policies and regulations before you even have to approach them. So sometimes what happens is that the financial service providers want to start this conversation, towards the end. Once they have a business model, everything is ready, is when they want to move and engage a regulator. But take whatever forums that you can tap into to engage these regulators and understand what policies and regulations are out there that can impact my line of business, and so that you can be able to feed that into your strategies and be ready and be compliant. I think that's what I would say.
Okay. Now there's the last question that we have. So, what capability skills are necessary for FSPs that will help them to serve customers? I'll repeat the question again. What capability skills are necessary for FSPs that can help them to serve customers?
So is this in terms of specific roles? So if it's in terms of specific roles, remember I talked about starting to be, let me find that slide, I think starting to be a little focused on customer-centric strategies. That then means introducing maybe some roles within your institution that can be able to conduct, say, even market research. Go out there, engage with your customers, and be able to collect insights. Also, having roles within your institution that can be able to analyze data. So having data analysts or data scientists that can be able to tap or collect data from different functions within your institution and be able to analyze and create this story and insights that can then again feed back into your decision making and also feedback into insights from the customers. What are they complaining about, so that you can improve yourself? Insights into your product design so that you can improve your products. So I think it's investing in talent within your institution that can conduct market research, that can conduct data analytics, and also supporting your customer-facing staff to be able to know how to engage your customers properly, and also be able to also gather this information from customers. well.
All right, Juliet, I think you've answered all the questions precisely. So now we can move on to the presentation.
So that was it from my end, unless there's any other questions.
Any other questions? I'll just ask our audience if they have any other questions. Let me check. Everybody who is attending this session, so please send us your questions. We have Juliet here, she can answer all your questions. So this is a very impactful session that we are having, as you already know, about enabling customer protection for improving your financial health. I'm sure you must be having a lot of questions with you. Please go ahead and ask. We still have time. So Juliet, let us give them like 30 seconds and
Sure.
let us wait for some questions if we get. Otherwise, it was indeed an insightful session, Juliet. It was wonderful listening to you.
Yeah, well, maybe I can take the question around regulation and tie it in with artificial intelligence, or when it comes to maybe credit scoring. So you could find if maybe regulators do not understand this black box, then there can be this conflict or contention with financial service providers, isn't it? So you're having financial providers that have built their whole model around AI, and then you have this pushback from maybe regulators because they don't understand this black box. I think could be one way that can then be a problem in terms of DFS. I don't know if that's what they had in mind. Others can, okay, and I've thought of something else. Something else can be regulations. So we find that regulators are used to working with traditional financial service providers. So you can find some of the regulations they put in place do not quite work for, say, fintechs and startups. Things like capital requirements, can be set too high for a startup to meet. I guess those are some of things I can think of in terms of not harmful regulation, but in terms of regulation that's not supporting possibly fintechs or DFS.
All right, Juliet. So let me just check once again if you've got any questions here. Okay. All right, so I think people have already asked all the questions they have in their minds. I want to ask you simply, so your presentation was almost like more than 2 hours, so we have heard each and every pointers that you've covered. So if you have to, in a nutshell, conclude your whole presentation for the general audience who are not from the industry, what would that be like from your side? Any messages that you want to convey to everybody regarding their financial health?
Yes, I think it's putting the customer in the middle. And once we put that customer in the middle, then we would be able to understand what their risks are, what their inspirations are, and understand this construct of financial health better. So the different actors, if we come together and ensure that in our conversations, we are putting this customer in the middle of it, I think then we would be good to go in terms of consumer protection that then supports financial health.
All right, noted. So we've got one question in here, and which is, do you think that more loose regulation around what clarifies as collateral is needed, similar to Ethiopia?
Yeah, that's a good question. I don't know what loose means, because different jurisdiction, I guess, have different definitions, but it's
Yeah.
how to strike the balance. There is always issues around that definition of collateral. I've mentioned issues around the capital requirement, where there will always be some conflict. I think it's just, once again, if we have what I was talking about in terms of the dialogue, the collaboration, then each actor can be able to come to the table and see then how the two can come to an agreement, where they can strike a balance. So remember, a regulator is not just pushing out regulation for the sake. They do have the public interest in mind, and these consumer protection issues in mind. So on one end, possibly they can be extreme, but it's having these regular and continuous conversations to see how you can meet in the middle, not necessarily have a loose interpretation, but the right interpretation that then ensures the customer is protected, but still keeps the financial service provider sustainable.
All right, Juliet. That was the only question that we had. And I think this is all we had in questions. Anything else you want to say?
No, that's it from my end.
Once again, Juliet, it was indeed wonderful listening to you. I hope the audience also has gone through the complete presentation and have attended it purely attentively. And now I would like to thank you for being here with us, for being the part of our event. Thank you very, very much. And once again, before we go, I would like to mention our partners. So everybody, our platinum partners are here. Our platinum partners are Google Pay, Phone Pay, Visa, M2P FinTech, MasterCard, Falcon. And our registration partner is NTT Data Payment Services. And on that note, we are done with today's session. And tomorrow, as you already know, we'll be starting our day again in the morning, early morning, and we are having more than 800 speakers. So be there with us tomorrow, and it'll be a full day of various presentations, various speakers will come, various panel discussions will happen, and we've already got more than 7,000 registrations. So it's going to be a big event. So we want to see you all at the third edition of Global FinTech Fest. See you all. And once again, thanks a lot, Juliet. It was wonderful having you here with us. Thank you.
Thank you for having me, and it was a great pleasure. Excellent questions from the audience, and thank you very much.
Thank you. Thank you so very much. Namaste.